Hi there, welcome to Kneppy Invest. We are close to the end of January, just a few more trading days, and during those trading days we're going to see a flurry of Appendix 4Cs and Appendix 5Bs. Both of those are quarterly cash flow reports from smaller companies and mining companies, and the majority of these companies are not operational cash flow positive, so they do have to give the market quarterly reports. Now, I do like these quarterly reports because it does give us an indication of how some companies are performing. And in this video, I'm going to be taking a look at a company I've never really taken a look in the past. And one of the reasons I've never really taken a look at Mad Paws is because they are a recent listing on the ASX, March 2021. And I do like to see a company be listed for at least 6 months and preferably 9 to 12 months before I actually take a look at the company. Now, one of the reasons I have a little bit of interest in this company, not only am I a pet owner, and I do think there is or will be growing interest in this area over the next few decades. And it's just the way humans perceive animals has been changing, and it will continue to change for the positive in the future. And I do think people will spend way more money on their pets over the next 5 to 10 years. So Mad Paws has that potential to grow from where it is now. So let's get stuck into it, and I will tell you exactly what Mad Paws does because they have quite a few verticals going on. One of the little things I do have against Mad Paws, the company, is just the name. It's just a little bit too similar to mad cow disease. I think I'm being a little bit too pedantic about that, and most investors won't even care about the name of this company. Anyway, this particular slide comes from one of their presentations talking about how they are expanding their verticals, and they're doing a lot of expansion over the past few years. Now, when they first started, they're all about MadPaws Care, and I'll probably suggest there is probably significantly lower margins in MadPaws Care to where they've been heading in the last 2 years. MadPaws Health, talking about pet insurance, flea and tick health services. I'd say there's probably pretty good margins in that. Food, so raw food, dry food, lightly cooked food, also toys and snacks, and pet accessories. I'd probably say that one of the reasons why they've decided to pivot into those verticals is because of higher margins, simply because their MadPaws Care area, talking about pet sitting, daycare, that sort of thing for the pets, I'd say there's probably lower margins in that. So they are increasing their verticals, and as they increase their verticals, we'll see this company grow their revenue over time, and more than likely we'll see the margins in this company also improve. Something else I did find intriguing is how they derive their revenue. So traditionally, they've been in MadPaws Care, and a lot of that is just recurring transactional revenue from pet sitting, daycare, dog walking, house visits. And one of the reasons I do think that would be low margin is because the sitter, or maybe even the daycare and the dog worker, are not employed by Mad Paws, and more than likely the revenue would come from the sitter themselves. They get paid from the pet owner, and then it goes through to Mad Paws. And that's one of the reasons why I think that area, the MadPaws Care, would have low margins. Now they are pivoting towards the other 3 areas: Mad Paws Food, Mad Paws Health, Mad Paws Joy. They also have subscription available in those areas, and their subscription fee area, they are targeting margins between 30 and 40%. So it would not surprise me to see the management of this company pivot and focus on those 3 verticals. Mad Paws was founded in 2014, and as I've already mentioned, it hasn't been listed on the ASX for very long, 26th of March 2021, but with the most recent Appendix 4C, that gives us 4 quarterly reports that we can look at. The CEO and co-founder is Justice Hammer, and I do believe some of the other co-founders still have significant roles in this business, on the board, that sort of thing. Maybe one of them is a chairman. And the major shareholder of Mad Paws is Bombora Investments. They have a 16.5% holding. Share price has come down a little bit over the past few trading days, just like most other companies on the ASX. It has fallen from 22 cents to 19 cents. And the current market cap for the company is $41 million. and the ticker code for Mad Paws is MPA. Now let's have a look at some of the financial numbers, and this is for financial year 21 up until the end of June 2021. We will see the half-yearly numbers in February, which is starting in less than a week. So within the next month and a few days, we will know how Mad Paws have performed in the past half year, but we do have a clue just by looking at the most recent Appendix 4C, and we'll see that in the next few slides. Revenue did grow almost 50% from financial year 20, but it was on a low base and up to $2.9 million. Now, Mad Paws is not operational cash flow positive nor profitable. In fact, they are unprofitable and operational cash flow negative by fairly large amounts, loss-making by $12 million and operational cash flow negative by $3.7 million. But those numbers will be improving in the half year and the yearly numbers or yearly results when they are released in August, more than likely. They have $12.5 million of net cash, and the majority of that cash is because of their listing on the ASX, but that has been dwindling because they are operational cash flow negative. And the price to sales ratio, based off the revenue of 2.9 million and the market cap currently at 41 million, is 14.1. That is a little bit high. I'd like to see that rise, but more than likely, we will see revenue possibly triple, quadruple from 2.9 in financial year 22. I'm just saying possibly right now, but does seem like this company is on that trajectory. Typically, I like to go back 1 year to see how the company was performing for the same quarter 1 year ago, but Mad Paws wasn't listed on the ASX at that point, so let's go back to their first ever Appendix 4C they did release on the ASX, and that was for the March quarter in financial year 21. Receipts to customers 3.3 million, and the company was operational cash flow negative in the one quarter by just over $2 million. Cash on hand improved because of the listing, and in fact finished the quarter at $16.5 million. So now let's have a look at how they performed in the most recent quarter, and hopefully receipts have grown and costs haven't grown as much or quickly as receipts. So let's have a look right now. And that is exactly what has happened for Mad Paws. In fact, receipts are up to almost $6 million. Now, costs have increased, but costs have not increased as quick as the receipts. So the company is heading on the right trajectory. And there is a chance if they continue on this trajectory, they could be operational cash flow positive on a quarterly basis in the next few quarters. That remains to be seen. But their operational cash flow negative in this particular quarter by only $809,000. Not a lot is happening in Mad Paws in regards to cash flows in investing and financing activities, so that operational cash flow negativeness of the company all went to the bottom line, and the cash on hand in the business fell from 9.9 million to 8.9 million. Now, because we don't have a lot of data for Mad Paws, we will have a look at their operational cash flow history in a few slides, but we only have 4 quarters there, so a very small sample size. I do like to see at least 8 quarters of history before determining whether there is any trend. But Mad Paws did provide their quarterly operating revenue going back to quarter 1 2019 in their Appendix 4C commentary section, and it has been growing over that period of time. There was a bit of a hiccup in 2020, more than likely that was associated with COVID-19, but it has been going up at a fairly good rate over the past 5 to 6 quarters, and up to $2 million in the most recent quarter. So things are moving right for Mad Paws at this point in time. And because I don't think Mad Paws will, probably because of margins, focus on their subscription or annual recurring revenue. They even have provided annual recurring revenue in the commentary of their Appendix 4C, but I want to focus on the subscriber base. I want to see this growing at a fairly good rate. Now, to be honest with you, it was on a low basis. This was in thousands. So if we go back to quarter 3 2021, it was 300 subscribers. That grew to 3,000 subscribers in one quarter and has grown to 4,900 subscribers in the most recent quarter. Now, it does look like maybe, and just maybe, that the rate of growth in subscribers has slowed down over the past few quarters, but that's a very small sample size. But my eyes in regards to Mad Paws over the next few quarters will be on how they're growing subscribers. If we do see this to accelerate, that would be really good news for the company. To be honest with you, when I saw Mad Paws cash receipts for the September quarter, 2021, of only 2.3 million, I cast aside the company and I went, yeah, I won't be looking at you for this particular quarter. But we did see a significant increase in receipts in the past quarter from 2.3 million to $6 million. Now, this does not mean there's any trend because there was only a 1 quarter increase. We need to see this increasing from here on in. And that's why I want to see at least 8 quarters of history for a company. But things look like they could be moving in the right direction for the company. One of the negative things about TradingView, and this is the daily chart for Mad Paws, from when they did list on the ASX back in March of 2021. One of the negative things about TradingView, for those who do use it, if there has been a similar company on the ASX with the exact same T code, TradingView does not differentiate between those two companies. And if you look at right at the beginning of this chart, there's a candlestick with the share price at about 3.5 cents. And if you expand this chart, that goes all the way back to 2010. So for some reason, TradingView just does not differentiate between that company back in 2010 that had a ticker code of MP8. But we can work our way around it. Now, if we look at the chart or the share price action for Mad Paws since March of 2021, nothing has really been happening. The most hype in this company was in that first few days of trading. In fact, the share price high for the company was on that first day. In fact, the share price got as high as about 31 cents. But for the majority of the last 10 months, the shares of Mad Paws have been trading in a range between 15 cents and 25 cents. And right now, they're at 18.5 cents. And what I'd be looking for with Mad Paws is an uptrend developing on some strength. And when I say strength, I mean volume. I want to see an increase in volume. And that is telling me the market is getting excited about the company. And the best way to see an uptrend develop on strength would be the company to release some good financial news, like an Appendix 4C that is operational cash flow positive. That's one example. There could be other examples, maybe a profit upgrade or an upgrade saying they will be profitable for the financial year, something like that. And if that happens, we could see an increased interest in the market and an uptrend developing in the company, and that would be the time to take a position in Mad Paws. That's all I have for this December quarter Appendix 4C video for Mad Paws. First time I really have taken a look at this company. I am a pet owner, so I might be a little bit more interested than those who don't have any pets. More than likely will not be using their pet sitting, dog walking verticals because I do all that myself. But maybe if they do provide some nice toys, that sort of thing, I could become a Mad Paws customer. If you have any questions about this company, maybe any other company on the ASX, leave it in the comment section of this video and I'll get back to you, maybe. Anyway, last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day. Talk to you later. Bye.